All right, good afternoon, everybody. Welcome to your favorite beverage of the day question and answer session. Today out at the club, what were we talking about? Let's get right to it. We were talking about what do you do with extra money and extra cash or whatever that you have. And there are a lot of people, they put it in a savings account, and we all sat around debating this whole thing. I'm not anybody's financial advisor. I can just tell you what I do and what's worked for me, and the discussions that we had out at the club. So I work a full-time job like everybody else, and I've got like side hobby, side gig. You've seen my past videos. I make signs, I weld things for people, make extra money. And somebody said, well, what do you do with that extra money? And we all went around, discussing it. Now in the club there's about 20 people. There's probably 12 people that actually show up all at once, sometimes 15. We review tools, we talk about projects and that stuff. But this time around, it was about, what do you do with the money? And I said, well, initially I just said, well, I invest. I go, but I take what little I make from YouTube and from the Amazon affiliate. I buy food for the animals that are strays that live out and around my shop. And if I need sandpaper or I need something, I buy additional materials. But there are times where, I've got, some extra money left over after the food and all that stuff, and I invest it. And so we all started talking about it. And some people out there are younger, some people are older, some people are already retired, and everybody had a different thought pattern on, how to invest and what to invest in. And I thought, well, it's an interesting, complex topic. I go, so the first thing we all agreed upon is I go, well, let's put it down into steps and let's just talk about each step for a minute. Well, the first step, you need to decide a trading platform. Now, that could be Webull, it could be Robinhood, Fidelity's got one, Charles Schwab, there's lots and lots of them. Merrill Lynch, all of them out there. So, but you should do a little bit of research, because one of them out there said, well, I don't like Merrill's platform because they don't allow you to trade cryptocurrency. That's true, they don't, not right now. So now you're better off looking at Webull or Robinhood. And in terms of investment, vehicles, there are different mutual funds that are not available to purchase on some of these platforms when they are able to be purchased on other ones. So you kind of gotta, make a good selection. I like Fidelity. I have an account with Fidelity. It's not a very big one. I've got one with Merrill Lynch. Those are the ones that I use. But look, it's up to each individual person to kind of decide, what do you want? You could take a look and do your own research and figure it out. Now, most of them are going to allow you to trade most all the common stocks, even the penny stocks, the micro caps, the mid caps. That's pretty diverse. And they all pretty much can offer you all of those in terms of buying common stocks. Mutual funds, yes and no. Some platforms don't participate in some mutual funds. I looked at one a while back. There was a nationwide fund that a friend of mine was interested in, but the platform doesn't have a market in it, so he couldn't buy it off of that particular platform. So again, the first step is to decide what platform you're going to use. Now I'm going to sidetrack a little bit, and I'm going to tell you another thing to think about is you have big Wall Street firms, and you have index funds, mutual funds, ETFs, and a lot of these are actively managed by the bigger houses, the bigger brokerage firms. These are the experts, the analysts, and all that. And I realized, like a lot of people that trade a long time ago, you're not going to beat these people. You're not. You could get lucky and make money, I suppose, or you'll make money if you stay with an investment long enough. But these people have quantum computers, automated trading. They're pushing as fund managers to make quarterly profits. So they get their bonuses, they get paid, and they get to keep their job. So they're kind of interested in more of that short-term trading approach, and they are experts in this area. Some of these people that I've talked to say, well, I bought this stock and it ran up and it did this. Then I talked to somebody else and said, well, I bought this stock and in a day or so it kind of tanked on me because of what they call a short squeeze, and we'll discuss that later. and they lost money, or at least they lost it on paper until they sell it. So it's a complex kind of psychological game, the market, and you have to be careful about what you're doing. And you're going up against these top expert traders. It's not a winning game. I mean, so you have to be very careful, do your own research and your own due diligence before you decide what you're going to invest your money in. But there are investments out there that are fairly safe investments. Now, if you think your savings account is, I have news for you, your savings account at the end of the year is going to pay you 0.5% on your money in your savings account at the bank. So at the bare minimum, you're better off putting it into some kind of a money market kind of account that will give you a better interest rate, we'll say, because let's say inflation is 3 to 4%. Well, you're actually losing money. It's being devaluated, every year. So your goal should be, well, I want to invest it, and if you can't keep up with inflation or thereabouts, but at least you're doing better than 0.5%, and your investments are growing. So those are some thoughts within that realm of, let's call it number one thing that you should think of. Now, moving on to number two, where's the confusion? Well, the confusion becomes with a lot of people as we went around discussing this. You had individuals that said, no, I only invest and look at index funds. Other people will tell you, no, mutual funds. Other people will tell you ETFs, exchange traded funds. Basically, you can buy and sell those like stock and so forth. And other people will tell you, no, I like to cherry pick my own companies. And other people will go, these big top dogs, these AAA companies and stuff, there's not much volatility, there's nothing exciting. So they start looking more to the mid caps, small caps. And if you really want to get speculative, I suppose you could look at penny stocks. I don't mess with penny stocks. I have no advice on them. So now small caps, mid caps, large caps, I mean, that's an area where I'm kind of in, and I'm very careful about anything small cap. I might have one or two stocks in there, that's about it, and they're very small positions. I mainly stick to mid caps and for the most part large caps. Now that's me. Other people are different. Do I have mutual funds? Yes, I do. Do I have ETFs? Yes, I do. And I have index funds. I've kind of look at it like a boat. I got my boat kind of balanced, or to some degree balanced. You can make your own choice and say, no, I'm going strictly with mutual funds because I don't want to have to watch what the market's doing all the time, or index funds. Or you can decide, hey, I'm going to take a look at ETFs. And everybody has their own philosophy. I saw in this small sampling of people out at the club that wanted to sit around and talk about investments. So the next step, educate yourself a little bit. Take a look at mutual funds, index funds, ETFs, and familiarize yourself with what do they do. And there are so many mutual funds out there, as an example, like ETFs, like all of these investments, that, like, let's say you're looking at a particular mutual fund, and I use Yahoo Finance a lot because it's fast and easy for me and it's free. And you can take a look, and they'll usually tell you the top 10 companies that mutual fund is invested in. Well, that's a good starting point. You can see if those are companies, let's say, that you agree with that you want to invest in, or maybe you don't. So that's a good starting point for you to begin kind of educating yourself, because you don't just randomly buy an ETF or an index or a mutual fund and people do, because I've asked them out there, well, why did you buy that fund? I don't know. What do you mean you don't know? Everybody says it's a good fund, or my neighbor, or whatever. What do they invest in? I'm not sure. I was just told, they're kind of a balanced fund. Okay, and so, you get into a friendly conversation, and then you show them by bringing it up on a computer that we have out of the club. I mean, this is what they invest in. Oh, wow, okay, all right. So sometimes they're happy with it and sometimes they're not, but it's your money. You should know what it is that you're investing in, how the fund's been doing, how is it done over the last 5 years, 1 year, 6 months, 1 month, how's it doing lately? Is it, screaming really high, and maybe you should just, keep your cash money like dry powder and wait a little bit and wait for a pullback on that stock, or maybe even a correction. Pullbacks are usually when the stock market, goes red for the day or what have you. And to me, a correction is when they start getting to 20% loss in the overall market, let's say between, the Dow, the S&P, NASDAQ, what have you. So if the market corrects that much, for me, it's a good time to look like Warren Buffett and these other people. Go back and look at these companies or these mutual funds and investments that you thought about and see, have they tanked down some? If they have, it's a good time to cost average in. I don't mean bet the farm and go all in. Let's say you buy, 10, 20 shares or 5 shares or whatever. And then you wait. Tomorrow it goes down a little bit more, another dollar or whatever. And then you buy another 5 shares. 2 weeks or so, it goes up $2 or $3. Maybe you buy a little bit, maybe you don't. And this is the process of cost averaging, and this is what I've done and it works. So in the long run, this is not for day trading. It's not for swing trading. Day trading is day trading. Swing trading, to me, swing trading is any short-term trading, like 2 weeks less, something like that, maybe a little bit more than 2 weeks or less. I don't do that. I used to do that. Yeah, I made money doing it. I've also lost some money doing it. And although I was ahead, I wasn't ahead like a lot, because you're buying and selling quantities of these stocks and you're hoping for the best. So I like the more long-term approach. To each their own. These are decisions that you have to make going forward. Now, this is a broad discussion, and in the next video what we'll do is I will get into, if everybody likes these kind of videos, you want to know more about what I'm doing and you want to know more about what the club's doing, drop me a comment, let me know that you're interested. And if there's enough interest in these videos, I'll keep doing them. But this was a generalization over one of the questions. What do you guys do with the excess cash that you have, whether it's every 2 weeks, every month? Well, like I said, first get a platform, then decide what kind of investment vehicles you're interested in. There's tons of free information out here. And I would tell you, don't subscribe to these newsletters and don't subscribe to these so-called gurus. I mean, anybody telling you they're right 80, 90% of the time, they're lying to you. It's not true. They're not, I can tell you. No way. Even the best traders, are not going to sit there and go, okay, hey, I'm making these huge percentile, gains off every trade. It's just to sell your books. It's to sell your courses. They're not doing it. If they told you it was 60%, it might be more believable. 65, maybe, somewhere in there. Nobody has a crystal ball. They look at the fundamentals, they look at the technicals, they might know more than you and I, and they can base decision making off of that. And a lot of times, yeah, they're probably correct, but you can also lose. They don't win on all these trades because you don't know how the market's going to react depending on news, events, or anything like that. So it's more into complex detail. We can talk about it on future videos. I'll try to keep things as basic of an understanding as I can. I hope you enjoyed this short video. I'll look forward to seeing you if you like this, and we'll do another one. You folks have a great weekend. Don't forget to click subscribe. Give me a thumbs up. I'll see you again soon. Bye-bye.